Jeremy, you were here last year and you came back, so I guess we didn't annoy you too much. So
yeah, well, thank you very much for inviting me back. I enjoyed it last year, so I'm very pleased to be here again today.
Thank you for coming back. I think before we get into any kind of questions, what would be great is, I'm sure most people, if not all here, really know Ripple, but it'd be great to hear from you a little bit about Ripple, what you're doing in terms of cross-border, particularly remittance companies, and what's changed over the last year since you were here last. So.
Okay. What's changed is what we've got bigger. But yes, I mean, to give you an overview of Ripple, we've been around for 7 years now. We had our 7th birthday about 2 weeks ago. We're building a new global payments network using blockchain technology. So far, we have over 200 customers, and these range between banks such as Santander, PNC, SAB in Saudi Arabia, and so on. And PSPs and money transfer companies such as MoneyGram, Instarim, TransferGo, Ria, just to name a few. In terms of the network itself, it's built on blockchain technology, and we have two types of software products. One uses blockchain technology but does not use a digital asset. It doesn't use XRP, and I'll explain a bit more about that later. But it means you still require to have, you're still transacting in fiat currency. You still need to have pre-funded accounts, Nostro accounts, and so on. The other piece of software we have is what we call, and that software is called RippleNet on-premise. The other software we have is called on-demand liquidity. It used to be called XRapid. It's now called on-demand liquidity. And the way that works is that we use the XRP ledger and XRP as a bridge currency. So you use fiat currency to buy XRP, it's sent to the receiver, who then sell it for the destination currency and then pass it on to the beneficiary. So for example, in the United States, there's a platform called GoLance, which matches freelancers with work. And they're using on-demand liquidity to pay freelancers in the Philippines. So GoLance has an exchange and account has an account and a digital exchange in the US. When they want to pay a freelance worker in the Philippines, they will put money into their exchange account in dollars. That will be used to buy XRP. The XRP will be then sold at an exchange called Coin One in the Philippines for pesos, and that will be credited to the beneficiary. And that whole process just takes a few minutes. So that's the technology side of it. In terms of the use cases, for the moment we're focusing mainly on remittances. So we're all over the world, in the Middle East, in Asia, South Asia, Latin America in particular. And in terms of the flows, they are, the first transaction started about 2 years ago, the end of 2017. I can't reveal volumes or any sort of figures, but I can say that volumes are growing strongly, and the number of connections and corridors are growing strongly as well. That's what we get measured on, and that's what we're building. In terms of the proposition, I mean, Ripple's vision is what we call the Internet of Value. And by that we mean our vision is that value will flow over the internet as easily and cheaply and ubiquitously as information does today over the internet. So our proposition is around real-time payments, operating 24/7, at low cost with certainty, and also to enable great customer experiences. So, for example, typically you buy foreign exchange, then you make the payment. With our APIs, you can do both as a seamless experience. And also, very importantly, we're a very data-rich network. So the sender can be certain that the data that they send not only meets the structured requirements of the receiver, but that they can be certain that it hasn't been changed over the course of the transaction, and that all the data they sent has been received. And that is very important from a compliance point of view. So that's where we are. So it's, we started 2 years ago in terms of transacting, and we're steadily growing. In fact, growing strongly.
We're glad to hear that the focus on remittances continues. And sort of looking at that, I mean, Ripple recently made an announcement in MoneyGram of up to $50 million, which took us all by surprise. Any sort of insight into that? And I'm sure there are
Well, I
people
can't-
here that would love for you to invest in their companies too. So,
Well, sure. It's not the area of business that I work in. But in terms of, the reason why we invest in MoneyGram, we believe that we can take a lot of friction out of MoneyGram's payment flows, and we can help grow their business using, in particular, our on-demand liquidity product. MoneyGram is a well-established global remittance company. It's embracing innovation, and it's exactly the type of customer we want to have on the RippleNet network. So that's why we invested.
and again, not wanting to know volumes unless you want to share them, but have you implemented it in MoneyGram already? Are you seeing a good sort of traction through this?
I believe it has been implemented, yes. Right. In fact, in MoneyGram, I think they announced their annual results last month, and in that they mentioned what we've done.
Okay.
Yeah.
Jeremy, I'm a fan of blockchain, so just to preface that, but I want to sort of play devil's advocate in terms of, one-to-many, many-to-one relationship. I can understand blockchain playing a key role, but here we have direct APIs that are instant. So what's the real benefit of using a Ripple sort of proposition on a blockchain? How does it really help us make it faster, cheaper, in what way?
Okay. Well, so I think a key point I would like to make is that we're using technology to solve the problems and the frictions in cross-border payments. A lot of those that were put up by David earlier, rather than we've got a blockchain, let's try and force it and create a network out of that. So, for example, in our RippleNet on-premise product, it uses blockchain technology. The sending PSP, for example, and receiving bank, or could be a receiving PSP, they will both have a ledger, which we call an ILP ledger, and they are kept in sync using cryptographic messaging. Okay, so what the key difference between other payments networks is that we link the ledger together. So it's different to a public blockchain where everyone's got the same ledger and everyone can see all the transactions and they're all replicated. It is only, with the RippleNet on-premise, only the receiving and the sending institutions see their transactions and see their own ledger, okay? But they're kept cryptographically in sync, so, it's real time, it's 24/7. And the blockchain technology allows what we call atomic settlement. And by atomic settlement, we mean the debit and the credit are either done together or they're not done. You can never get a situation where you've debited the sender's account, but there's been some problem and the beneficiary's account is not credited. So they're always in sync, and that provides certainty, and it provides a good user experience. And obviously it's 24/7 real time, which is where the whole market's going. But the other point is that RippleNet is a peer-to-peer network, so you won't necessarily want to have connections, or you practically have connections to every destination or every node on the network, but you can reach other nodes through an intermediary, through what we call multi-hop. Now, in some ways, that sounds similar to the correspondent banking network, where you go from bank A to B to C to D and so on. But the difference is that it's atomic, so that you can, the sending institution, an intermediary, and the beneficiary, they're all linked atomically. All the ledgers will be kept in sync, and either all three agree that the transaction is good and they all commit within seconds, or they say, or they reject it, in which case the sender knows immediately. So we're using the blockchain technology to solve these problems. I think the other point is that if you look at our on-demand liquidity product, which does use the XRP ledger, the key benefit of that is that you don't need to have Nostro accounts or a pre-funded account at the destination institution, and that is a huge benefit. David mentioned Earthport earlier on. They've been going for, I believe, 18, 19 years or so, and it's taken them that length of time to build up a network. And part of the difficulty is building up a network is getting accounts at banks and institutions abroad. From a compliance and due diligence perspective, they're costly and take a long time. Then once you've got them, you then have to fund them. And that is expensive and difficult. Whereas with our on-demand liquidity product, you don't need it. So, for example, with a real-time payment, you need to have funds at the beneficiary institution in order for the payment to go through. So real-time payments require pre-funding, and typically they require just-in-time funding. And that itself creates an FX risk because, if you're pre-funding at one FX rate, which is fixed for the amount that you pre-funded, and then you're having to offer real-time exchange rates to your customers, if the value of the receiving currency is going down, you risk making a loss. And as one of our customers pointed out to me this week, in fact, the ironic thing is that when the receiving currency is going down, that is when demand starts going up from the sending side. Whereas with on-demand liquidity, all you need is one account and an exchange. You can fund the transaction real time, and you can set the FX at the point of the transaction, and there's no FX risk from pre-funding.
I mean, you're right about having to build that Nostro network, but even with on-demand liquidity, I guess you need to have enough market makers around the world and enough liquidity to be able to furnish that when the payout happens. Is that something, I know you're very focused on that, how many countries would you say that now exists in?
You're absolutely right. We're working with exchanges in specific current countries, and we need to build up those exchanges. So I believe there are something like 135 exchanges that we can buy and sell XRP, but we're only working with a number of those on specific corridors at the moment. But the idea is to build up that network. So
Mexico, I think, is quite
Mexico is one, but there's bits. So Philippines is another, and there are others that are in the pipeline. But just to come back to your other question about the direct APIs, because you're absolutely right. Direct APIs, they work, they allow real-time payments and so on. I think the big difference is that with RippleNet, it is a network, whereas and there's standardization across the network. And so it allows you, once you join the network, to scale and grow your business. Well, with a direct API, if you've got a corridor which is big and it's growing and you're hardwired into that's great. But if you want to scale your business, suddenly you've got a proliferation of APIs, whether you've got banks and PSPs accepting your APIs or whether you're embedding the bank's APIs. And so suddenly you get this spaghetti of APIs. My view is that the hub and spoke model of APIs is great if you've got a contained sort of set of use cases and set of corridors. But if you want to scale your business into expanding it globally and into expanding the use cases, it becomes problematic. And certainly, certainly some of our banking customers say they want to move away from the API model because it is too complex. And coming back to our vision about the Internet of Value. The Internet of Values is about ubiquitous, easy, real-time payments globally, or transferring value globally. And we believe that the way we've set up RippleNet is the way to do it, and that bespoke APIs will constrain that.
I want to bring in some questions. See if anybody has any. No? Oh, yeah. We'll get the mic to Sohail, please.
Hi. I like the word you used, spaghetti of APIs, which is currently there, but the advantage is that you are de-risking. Because, for example, a company is working with 10 banks. So the money transfer company has one API and it's given to 10 banks. And now it goes to Ripple. And there will be only one API. So if something happens to Ripple network, then the payment to all the 10 banks will be suffering. In this case, only if there is a problem with one bank, 9 banks can take.
In terms of the way the RippleNet network works, it is resilient because it's peer-to-peer. So you could, for example, be running a node on RippleNet network, and you could be connected to 5 different counterparties, and there could be an issue just between you and one of those counterparties, which obviously would need resolving. But the connections to the other four would still be working. So it's, as a peer-to-peer network, it is actually very resilient. And also, as the network grows, you could have an issue with that one connection, but you say, well, actually, I can get to that bank that PSP by going through this node, multi-hopping across to it.
And other question is that you were saying that there will be no need for Nostro accounts. So can you elaborate a little bit more about it?
Well, there's less need for Nostro accounts. So, well, as I said, the way the on-demand liquidity works is that you need an account at a digital exchange for trading digital assets. So, for example, there's ones that we're using a Bitstamp, Bitso in Mexico, Coin1 in the Philippines, and so on. These are probably exchanges you haven't heard of, but you have an account in your local currency at an exchange, and if you want to send money, say from the US to the Philippines, you would put money in your account at the exchange in the US. That'll be used to buy XRP on the XRP ledger, and will be sent to the destination payout partner, who will have it on their exchange, so for example, Coin1 in the Philippines, and they will then sell the XRP for pesos and then credit the beneficiary, whether it's on their books or whether it's paid out in a different way. So you as a sender don't need to have any account in the Philippines. And that's a huge benefit, because as you know, opening accounts all over the world is a costly, complex and expensive process.
Well, and I guess the real benefit is the liquidity.
Yeah, it's the liquidity.
Well, right? So you're not,
Yeah.
sort of going back to it, and if you take this example, in our traditional world, as we all know, we would pre-fund in dollar account in Pakistan or Philippines and then convert it to pesos or rupees, depending on the rate and the transaction. Here, you would attach the token with the transaction when you send the transaction, and it would automatically, instantaneously get converted to fiat on the other side and get paid out. That's the sort of the logic of that transaction.
Yeah.
So does it mean that if we are sending 25,000 transactions a day, so there will be 25,000 transactions, Ripple transactions, and each will have a different exchange rate depending upon the time when the transaction was originated?
Yes, exactly. Every transaction will be at the exchange rate at the time of the transaction.
And does it mean that each and every bank partner in that country needs to be on Ripple network?
No, not necessarily. So a lot of our bank partners, they are connected to their domestic clearing systems. Okay, so for example, we have a number of banks in India. India is primarily a receiving country, and they're connected through the domestic clearing system, particularly the IMPS real-time clearing, which is, I think, about 90% reach across India, but also through the other clearing systems. So if if say a payment is made from the UK to India through one of our PSP clients here, if the account isn't at the bank, they will forward it through IMPS to wherever the destination account is.
And the last question is, if on the destination side, the payment network is a retail chain, not a bank or financial institution, so individuals are paying the transactions. So for example, in case of India, you're talking about, we have got 95,000 locations. So all these 95,000 locations, they can pay RIA transaction by accessing RIA servers by using a username and password. So this gives the ability for the customer to collect the fund from any of the 95,000 locations.
Yeah.
So how we are going to address this through Ripple network?
Well, the payout is up to the payout partners how they want to do it, but RippleNet supports digital to digital, so bank account to bank account. It supports cash payouts, and it supports payouts to digital wallets as well. But the payout side is really dependent on the payout partner how they want to do it. But in terms of the flow of funds and the compliance and so on, that can all be done over RippleNet.
Right. It feels like, Sohail, you're having a fire chat with Jeremy, but maybe we'll break in coffee and you can continue with him. Because this is my living room. No, I'm kidding. Are there any other questions? Okay, while they're thinking, Jeremy, maybe you could sort of talk about if people here want to join sort of RippleNet. What does that actually mean? What's the process? What's the cost involved? How long does it take?
Okay, so I mean, to join RippleNet is a fairly simple process. You'd have to decide whether you want to use the on-demand liquidity service and software, which runs in the cloud, or you want to use RippleNet on-premise. There's actually a cloud version of RippleNet on-premise, which is coming in. But typically, we're finding that our banking partners, they would prefer the RippleNet on-premise capability because it doesn't use digital assets, but they still have to use all their Nostro capabilities. Whereas a lot of the PSPs and money transfer operators, they're starting to adopt the on-demand liquidity product. So we can get you, we have a standard onboarding process. I think the shortest we've done it is 2 to 3 weeks for some of our smaller startup customers, but it can take up to 4 to 5 months for some of our larger banking customers. So who obviously have they've got to go through due diligence and new product authorization and so on. But it is relatively straightforward to implement. We have a whole sort of onboarding capability. So we now have what's called a test harness, so that when you first connect, you can test against the test harness and do all the testing yourself without having to test against a partner. We have a training program. We have solution architects that help you define how to integrate the service into your systems. Also, they will help with the how the flow of funds work and setting up Nostros and so on. And in terms of the cost, well, it's our whole vision is about low cost payments. So as you'd expect, the cost is relatively low. And although we have large customers like American Express, Santander, and so on, we also have some very small startup PSPs who have very tight funding, and it's affordable for them.
But it's fundamentally a bilateral model, right? So when I connect to RippleNet, I still need to sign contracts with each one of the partners. I mean, do you see that as opposed to, let's say, Earthwater's David touched on, which is one sort of API, and then you get access to all of these 88 countries and so on. A, do you see that, whether you would consider changing that model to a multilateral rather than bilateral, but do you see that as a handicap? And B, I know Ripple is very focused on lowering cost of remittances. So, by being an intermediary in a bilateral model, aren't you sort of adding to that cost rather than decreasing that cost?
I mean, I prefer to look at it as peer-to-peer rather than bilateral. I mean, you're right. You do need to agree who your counterparties are. They've got to do due diligence on you. If they haven't done it, if they're new, you need to do due diligence on them and so on. But once that's done, you're all set up, and it is set up as a repeatable process. And I would say it's not bilaterals in the sense of correspondent banking, which is, expensive and takes a long time. I think our key focus in RippleNet is to create a global standard, and we're totally focused on standardization. So, for example, we have a rule book for RippleNet, which stipulates the rules for processing, and we encourage our customers to sign up and adhere to those rules so that there's just one common way of processing, one common set of terms and conditions across the network. We have a standardized set of APIs for getting quotes, connecting, validating payments, and so on. And those are the same across the whole of the network. And very importantly, we have what we call the Ripple Payments Object, which is a standardized data structure for connecting. So once you are connected, you're connected to this standardized network, and that standardization and it gives economies of scale and allows you to grow.
I can take questions anytime if anybody has. Just please raise your hand and I know you're all dying for a coffee break. Jeremy, we've touched on Libre a few times over the course of yesterday and this morning also with David, and there was an announcement. I mean, it was a great sort of founding member team, but it looks like a lot of these guys are now having second thoughts. If you read yesterday's announcement, what's Ripple's view on Libre, and does it really change what you're doing? What do you think about it?
Well, one thing, I mean, Libre has been a great catalyst. It's certainly generated a huge amount of interest in our customers in terms of, they're thinking about how they should be doubling down on their investments and how they should be accelerating their plans and so on. It's also obviously raised the profile with the regulators. And our view is that the use of digital assets, in our case, XRP on the XRP ledger is the way forward. So it has been great in catalyzing the interest and the sort of the intellectual adoption of the way digital assets should work. Having said that, we'd always thought that Libre was hugely ambitious to create a global currency, and the headwinds from the regulators and so on, have come a lot stronger, a lot quicker than we expected. So, we're not entirely sure as to, well, no one's sure as to whether Libre will ever take off or not. But it has been good in raising the profile of digital assets, and it's certainly got our customers thinking about how they can use our on-demand liquidity capability, and how that can, support their business.
One last question from me. Last year when we were here, I think XRP was around 50 cents, and it's now at 26, 27. I guess two things. One is, when people look at that, they will think, how can you ever use XRP for remittances? And so I think, I know you can, but it would be great for you to clarify that. Mm-hmm. And is this fluctuation, first of all, is there enough liquidity globally to make that happen? And secondly, is this sort of halving of XRP really just affecting, your own sort of funding of your operations and has no consequences on the actual remittance transactions that are taking place? Or how should people view this? Because that's quite a fluctuation when you...
Yeah. The liquidity of XRP is much more important than its price. Because we use XRP in our on-demand liquidity product as a bridging currency. Okay, so going from US dollars to Filipino pesos, you US dollars buy XRP, sell XRP to pesos, and that takes 3 seconds. So the volatility and the level of the price, well, certainly the level of the price for XRP during that 3 seconds doesn't matter. It could be 26 cents, 50 cents, whatever, because it'll be pretty static. And the volatility over that period is way, way below the volatility of US dollars to pesos over the course of a day or even an hour. So the price itself, doesn't matter too much. But as you say, the liquidity does. So obviously, if you if you want to do X $100,000 worth or millions of dollars worth of transactions across an exchange, that exchange needs to have that liquidity. So that is part of the the challenge that we're helping exchanges grow. We're helping them. Bringing business to them. Is working in Mexico, it's working in the Philippines, and there'll be a steady growing number of exchanges. And our whole view is that, as digital assets increase in usage, in our case, as XRP is used as a bridge currency, that will drive liquidity up. And there's certainly plenty of XRP out there to support that.
Sorry, I said it was last, but just one more question. I mean, Ripple is not a regulated entity. But I know you're in very close contact with regulators around the world. You work close. I mean, what's the reaction of regulators towards Ripple in terms of you're at the core of facilitating a regulated transaction, but yet Ripple is not regulated?
Ripple is a software company, so we don't. We're not party to any of the transactions. We're not responsible for compliance. We make it easy. When parties do a transaction, they go out to their own compliance systems to make sure the transaction is compliant. So our customers are responsible for compliance. They're the regulated entities. We are a software company. And be very clear that the XRP ledger itself and XRP, that is a public blockchain which is independent of Ripple, the company. Okay, we build software on top of it, but if Ripple disappeared tomorrow, the XRP ledger would continue. Now, having said that, we have it's in our interest to make sure the regulators are informed about how RippleNet is growing. They're informed about digital assets. Our whole ethos is not about disruption. It's not about trying to sort of anarchy in the financial world. It is about working within the financial system, working with banks, working with financial institutions, and working with regulators to create the internet of value and the payments network of the future.
Great. I think if there are no questions, we'll bring it to a close. Jeremy, thank you so much for your time. Ladies and gentlemen, Jeremy Light.
Thank you very much.